Hello, I'm Benjamin Cummings. We're here today with Ross Riskin, CPA, PFS, and Certified College Financial Consultant. Good to have you with us.
Thanks for having me.
We want to talk now about college saving strategies. Can you help us think about what should be considered when deciding the right savings vehicle for a client?
Yeah, it's a great question. So when I'm going through that with clients or either working with advisors in that, I'm looking at four different things for a savings vehicle. I'm looking at tax efficiency. So both on the contribution side and the distribution side, is it a tax efficient investment vehicle? I'm looking for financial aid efficiency. So is this something that's going to be detrimental to if we have to report this on the financial aid forms, or is it going to be okay? And that kind of will come into another discussion. We'll talk about well, does the family even qualify for financial aid? And then the other two are going to be investment flexibility. So once I choose a vehicle, what investments can I actually invest my money in within the plan? So 529 plans are more limited in that sense versus a Roth IRA or a taxable investment account. We can kind of invest in a wide variety of asset classes. And then the fourth one is going to be operational flexibility. So how easy is it to actually open up? How easy is it to change beneficiaries if we need to move things around? So that's another thing I like to look at, especially if some clients want to be more hands-on with actually managing the vehicles or managing things themselves and are only looking for guidance from the advisor.
Okay, yeah, that's very good to know. Can you provide some examples of some strategies where you might end up using more than one?
Yeah, definitely. So as I said before, I'm not a proponent of a one-size-fits-all. So I'm not somebody that says put all your money in a 529 plan, because things change and we want to have options. So maybe the client is in a position where they have a 529 plan in their state where they're entitled to a state tax deduction on the contributions going in up to $10,000. But they decide, hey, they should really be saving $15,000 or maybe $20,000 a year or whatever to reach that college funding goal. So maybe they only put in up to the maximum state income tax deduction limit of $10,000 into the 529 plan. And then the excess money, we can kind of maybe decide, is this better in a Roth IRA for some tax-free investment growth, or is it better in a taxable investment account? So we have some diversification there. So I'm a big proponent of that too. So not just diversification of the assets themselves, but also the location of where the money is set aside for college.
Hey, that's a great point as well. So what's an advisor's role in these decisions of the vehicles that are available?
Yeah, the advisor's role is really providing guidance here and really asking as many questions as possible of the clients. Because some clients may come to the advisor and say, hey, I know my son or daughter, they're going to go to school. It's not, it's not something that they're considering. They're definitely going. So we know a 529 savings plan is going to be, probably a better choice for us. Then there may be some clients that say, I don't know if my son or daughter is going to go to school. I don't know if they're going to get in. I don't know if it's right for them. So then that's where we may look at those other vehicles outside of a 529 college savings plan, where we have some flexibility should the son or daughter choose not to go to school or not to go to school at that time.
Yeah, those are some great points for consideration. Thank you.
You're welcome. Thank you.